Let's start again. Ladies and gentlemen, thank you very much for attending tonight's webinar. Today's webinar will focusing on earnings. Okay, earnings crash. We use Facebook as a good example because Facebook, after the earnings crash, dropped almost $50, smashed the bullish trend, and now is actually in a sideways trading channel. So today we are focusing earnings on Facebook, why, when, how, and what. And afterwards, after the presentation, we will spend time analyzing Facebook trading opportunities using live market data. Any questions, please feel free to type up. First, what happened to earnings? This is Facebook. Okay, as you see from here, Facebook was $219. $219. Then there is a conference call, okay, announcement. Then literally from $219 smashed down to a low of $164.30. The gray part, as you can see from here, is pre-market and post-market. My platform let me see it, but this is just showing how the market react. Okay, how the market react during aftermarket, post-market, during the earnings announcement itself. Okay, yes, I'm using TOS for GD switching purpose, Irene. So why I show this one to you, so you understand that the professionals, the serious money, the real money, the big boys, the big boy traders, all have take action before the market open. Okay, so let's say you're a serious trader and you got few $100,000. Those players are a few $1,000,000. Most traders are more serious. Buy and sell during the pre-market and post-market. As you can see, the shadow from here, the trading volume during pre-market, post-market is even higher than actual official trading hours. Okay, so these are actual pre-market announcement. So sometimes you see, Thomas, why the thing have a major gap down, gap down? For US market, there is always pre-market and post-market. Any question regarding pre-market, post-market? Any questions? No. This one, pre-market, post-market, plus 1 hour, after 1 hour market average is referring to shares. Okay? Some brokers, not all, okay, let you trade. Okay? Let you trade 1 hour before market open, 1 hour market open. Technically speaking, it's variable. Okay, there is sometimes they trade plus minus, but most of the time I say 1 hour after, 1 hour before. Okay, before we go further, for those people who do not know me, this is my bio. Okay, I retired in 2002. Okay, I've been trading for, like you can say, for actively trading for donkey years. Even before my retirement, I'm active as a trader. Okay, I got 2002 I retired. In 2005, 2000 I elected as a founding president of Options Trader Club of Singapore. Okay, founding president, now known as Online Traders Club of Singapore. Then in 2007, 2009, I started online trading. I bought OTA franchise from America. Sold it at 2009. 2009 until now, I run Traders Roundtable. So trading to me is my passion. This my primary retirement or income stream is come from financial market. Before I continue further, disclaimer needed to cover everything. I put in below, profit and loss is the own personal responsibility If you're not so sure, please speak to your financial advisor, etc. for thing. So in today's session, I was talking about intraday trading and swing trading. Before we go further, before we go to the actual style, there are three main style of trading that you can use to trade the markets. For Facebook, you can use the fast aggressive style, intraday, intra-hour trading. Then we got directional swing trading. Okay, then we got passive conservative trading. Passive multi-directional trading using options. So in today's Facebook live market analysis, I'll be talking about hunter, fisherman style, and farmer style. All three I will share to you and see what opportunities available to trade. So now let's go to the actual earnings, actual webinar proper. Okay. Now, what is earnings? Earnings are economical announcement happen every 3 months. Okay. US earnings only happen to US market. Only US market have the volatility and the depth to trade. Any questions about earnings? Earnings is about announcement of past performance and futures projection. Facebook crash not because of what you call past performance, is because futures expectation and outlook, that what it caused Facebook to crash. Any questions about earnings? Say yes or no, because I need to monitor whether you all can hear me now. So before we go earnings driver, let me go to you what we call a typical trading cycle of US market options, like US optional shares like Facebook, Google, Amazon. There's a strategies we use before earnings, that are called earnings trade. Multi-directional trading open 48 hours before earnings itself. Then we call ultra trading immediately after the earnings, breakout momentum trades. Then high options premium volatility trades. After that, then we got normal directional trades, swing directional trades, best 1 or 2 weeks after the earnings announcement. So basically, earnings is the start of a trading cycle. So let me go further. This is last 52-week cycle. It's for Facebook. As you can see from here, the bottom part here, you see the one red dot, and the blue dot here is what I call earnings call. Earnings announcement over here. See that? Earnings announcement start from 218, crash down to 175, retrace 2 days. 2 days down to retrace back to 165. Now it's going up. Now goes stuck. Yesterday market close is $180.05. Next, previous earnings, yes, from 160 shoot up to 172, 175 here. Then this is July, August. Then the first quarter earnings, you can see over here, went up news, no much movement. One gap here create bad news, because why? You can see the price go down. Thomas, it's not the earnings good and bad. I repeat again, ladies and gentlemen, it's not the earnings good news or bad news. The earnings will cause market reaction. Earnings may be good, but market may lead down to sell down. Next, the first earnings here in somewhere in February. Can you see here now? Earnings here shoot up, gap up here, go up by $10 upwards. So earnings can move the market. Okay, I repeat again, earnings can move the market. Another thing is this: be very careful. Earnings can distort and destroy trend lines. Can you see where previous earnings before in April? Can you see gap up for 160, wow, to 175, go up to $218. Just come out one earnings announcement only, the thing crashed down all the way down. So when you special trading tips for those who trade US market. Unless you hold for long-term investments, my advice to you, if you're trading shares, whatever CFD, get out from a directional bear trade or bullish trade 5 days before earnings announcement. Why? Can see now, bullish trend, correct? A 3 months bullish trend, one earnings come out, got destroyed, got the trend got wiped out. Wiped out so badly that 3 months 3 months of bullishness got annihilated in two or 3 days. Any questions about earnings announcement and technical bullish, what you call technical trend trading? Any questions, yes or no? Any questions? Okay, good. I need to put no because I need to understand whether you all listen to me or worse, internet. Yes, it may crash. Okay, Mr. Lai, if result may crash, I will show you a few examples later on during the earnings. Okay, if the earnings is good, come up, the thing shoot up, correct? The big shareholders or the big boys may take opportunity to take profit. This one got chance, Mr. Lai. I will explain to you. I will show some live example later on. So now let me show to you. This is a trade which was done a few days before the earnings. You see earnings cost gap. Gap means what? Yesterday closing price and today opening price is called a gap. Okay, so like this one like that, bullish trend. April announcement, retrace back for 160, shoot up to 175. Then from there, become a nice bullish trend for 175, run all the way to 218. Earnings announcement come out for what called expectancy for forward-looking views do not meet market expectations. Big sell down, take profit. Okay, so a gap. This gap is because caused by major price movement during pre-market and post-market trading. Now this example now was done a few days before. Okay, this trade was done few days before the earnings announcement. Okay, I'll explain to you danger. Bullish few days before announcement, we intend to do a bullish trade on Facebook. We project Facebook potentially can go up higher. Facebook shares cost $210 at that time. So you can buy 100 shares of Facebook shares at $210. So 100 shares of Facebook will cost you $21,000. Either that, you can use options to trade. You can see on 23rd, for about 4 days before, 3 to 4 days, about 4 days before the earnings announcement, I enter a bullish teaching directional trades. 23rd of July. Facebook call options cost you $9.60, 60 days. So you got two choice. One choice, buy shares, they are bullish. Two choice, buy one call, cost you $9.60, or you can buy a share for $210. $210 will cost you $21,000. $9.60 options will cost you $9.60. Understand so far? Any questions about shares and options? Okay, next, 25th. Because a lot of people predict, forecast, opinion trade that is bullish or bearish. Okay, Keith, I can show you strategies that cover both sides. But let's do it simple, do bullish. Let's start with bullish first, bullish directional trade first. Okay? 25th option, 25th, I was right. Oh, the thing from 210 shoot up to $217. Hey, I make money now. My options now is worth $1,472. My profit now is $502. In how many days? Enter on the 23rd, correct? On the 25th, now worth $500 in profit. I buy a time, it will cost me $210. $210. Okay? $210, 25th, cost me, now see now. So I can take profit, but then I'm doing this teaching trade to show people the good and the bad about doing a directional trade through earnings. Okay? 25th, okay? So on the 23rd, what happened? You're wrong now. Facebook collapse. Of course, we know Facebook collapse. 23rd, Facebook is trading $210 per share. On the 26th, Facebook is trading $170. If you trade shares, if you buy 100 shares for a bullish trade, okay, your $21,000 are now worth $17,000. You lost $4,000. But you bought an option for $960. At $160, how much can you lose? Maximum loss is $960. So, which one better? Buy shares better or buy options better enough for trading? You notice I use the word trading. I'm not talking about investing. Trading purpose. Any questions about this scenario? Because this trade, okay, this trade was especially done just to teach people how to trade. This is a teaching trade. This is not my personal trading. Because people ask me, Thomas, danger how? I show to you. Normally for earnings, I do not tell people to do directional trading. So collapse here. By the way, ladies and gentlemen, stop loss will not help you. Why? Let's say now you put a $10 stop loss. The stop loss do not work during pre-market or post-market trades. Stop loss only work with official market hours. Market open at market from 210 drop all the way to $172, $74. Means what? Opening bell, $200 stop loss triggered. You will feel a market price of $174, more or less. So remember, stop loss at $200 do not mean you will lose only $19. So Thomas, how can we do trading about it? Okay, what can we do with trading about it? Let me show some trades that was done. Okay, this trade, Thomas, you show this trade. You see this trade. Okay, 26 earnings come out, correct? On the 27th, you can see from here now. This is what we call the intraday trading, ultra-day trading. 9:37, short 2,000 shares. This is my trading, my own trading, okay? Short 2,000 shares at 9:33, 8 p.m. Okay? Take profit at 12:33 a.m. Trigger limit order. Short at 176. Take profit at 175. Means that short at 176 short 176.89. Buy back at 174, 175.41. So technically speaking, I make $1.48. So $1.48, that means what? I make almost $2,900 for this trade. The problem for this trade is what? Need a lot of capital. So this type of trade, it's only recommend for people who are skillful in what you call day trading shares. Okay, Thomas. Thomas, what happens if I'm not skillful in trading shares? I can't afford to trade shares now. Too expensive, Thomas. Like that, how to afford? Fine. You can always use day trading using options. This trade is done by one of my students with a small account size. You see now, she bought a Facebook vertical directional trade for $1.02 at 10:37 p.m. Take profit, okay? Buy. Okay, he bought a what? He bought a trade, is it? Okay, bought a trade. Then he sold this trade at how much? At $2.45 back in market at 1:32 a.m. Any questions? This one, why he used a vertical spread is very straightforward. Because he cannot afford the straight call or straight put. Because in a volatile market, okay, like $100 company, a straight call and straight puts is going to be very expensive. That means that he may be out of a budget for most people. So as a good trader, good trader must follow what we call risk budget. What's risk budget? His risk budget per trade is $250 or less per trade. So he bought this trade for $1.02. It's $102. Yes, it's a debit spread. Okay, it's a debit spread. Okay? This type of trading need more skill because this is intraday trading. Very often can be intra-hour also. Okay? So this type of trading need more skills. But I can show you, I just show it to you as an example. Is that you cannot complain that you cannot afford to trade. You can, if I know what you're doing, you can trade as low as $100, $150, $200, $250, even for day trading. You need to have acquired not the trading know-how, the trading skills, understanding of market. This one is not about the methodology, it's more about the skills base. By the way, the person who do this trade, his account size is sub $10,000. Okay? Any questions about this trade? As you look carefully from here, you can see here now. You see now, 175 to 177, sell bear call spread. Sell $1.185. Okay, you can see here now. Buy 1850 call for what? Directional trading. 56 days away. $6.90. 180. So this trade, is it making money now? Yes, it's making money. How I know it's making money? Straightforward. Facebook now is trading at 108. Wait, let me go here. Facebook now, as you see from here, you can see what's the earnings. I enter earnings over here. I bought at time it was $180 out of the money. So I bought at time it was $150. So am I making money now? Yes, I'm making money now. Is it a lot? No, I'm not making a lot of money. Okay? I'm not making a lot of money, okay? I'm making money, I say. Okay, next. Okay, let's go back to the slides. Any questions so far regarding the slides? So, anyway, I got up to 21st of September for the market, for the Facebook to go above $180. Chances very good? Yes, it's good. Okay, by the way, I took partial profit again. Okay, this one, I show you this chart pattern is based on 1 day candlesticks. Remember, I took partial profit. I bought the call at $180. Correct? $180 call, correct? The high 3 days ago, last week, was 188. So I already took profit. In fact, Not all the trades, of course. Out of 4 contracts, I took profit for at least, I think, 1 or 2 contracts really. Any questions so far? So, Thomas, why you don't buy the shares? I showed you. Let me show you why I don't buy the shares. Thomas, why I do this trade? It's very simple. Because in order to buy the shares, it will cost me $175 to buy the shares. Okay? The time I short $175 around there. So you think it's a good idea to buy $175 or to buy $6.90? Which one better? $175 to buy the shares or $6.90 better? So a lot of time, unless you want to do day trading like here, like that, 9:30 enter, short the shares at $176.89. If not, try use options. Okay, I do not know what is going to happen to Facebook. I don't particularly care. As a good trader, I try not to predict the market. I try to see market, trade market. $6.90 versus $176. Of course, we take $6.90. Thomas, options very dangerous, lose a lot of money. Of course, like all things, if you use the thing wrongly, can lose a lot of money. If you go and buy 2 contracts, 4 contracts of these will cost you $2,760. Maximum, how much you lose? $2,760, which is roughly which is what? Which only is equivalent to $20 over. $23.60 risk. So you got your chance to lose $26 risk, or you can buy the shares or sell short the shares. Any questions about directional swing trading? Okay, for Facebook or share trading. Options here, we got one example here. Any questions? When I do option trading, I tell all you all. Eric, what's the question about? Okay. So, Thomas, Facebook, very expensive. Let me show to you how to trade expensive branded shares. Facebook, $21. You can use option share as cheap as $25 to trade. Apple can be $100. Alibaba can be $100. Next week can be $100. Can see now, Twitter can be $100. Google can be $250. Amazon can be $250. So instead of using physical mother shares to trade the underlying, I advise you use options. Okay, let's go to shares out. Let's do some trade analysis. Anybody interested to trade Facebook? Bullish or bearish? Let me structure a trade for your needs. Eric, give me a directionality, give me a budget. Then from that, I will structure to you. I will show you how to trade bullish, bearish. Okay? And give me a budget, please. Okay, budget. Okay, why don't we start with $1,000 or $500? You're very scroochy, my friend. Okay, CFDs be very careful. CFDs do it as a day trading. Use it as a day trade. Use it CFD. Use it as a day trade or at best overnight trade, because Facebook is one of those jokers, one of those crazy company can go crazy on you. I mean, crazy on you now. You think okay? I mean by this now it's bearish. Now it dropped down to $180. What happened if Facebook suddenly announced the China government tell Facebook said China government said okay gentlemen, I will allow Facebook to come in. Do you know what happened to Facebook now? Hey friend, Facebook will turn Superman. Yes, MSA now. Okay, will turn Superman. Means that from $180 shoot up to $210. Okay, that is if suddenly come out Facebook announcement. We have come to agreement with the China government. The China government have in principle agreed to us to let us go to China market. They will shoot up. Okay, on the other hand, okay, Facebook now suddenly got hacked. Okay, don't mind. The Facebook got hacked now. Wow, suddenly for 24 hours wow, everybody can access Facebook. You know what happened to Facebook shares now? Anybody tell me? What happened to Facebook shares if suddenly Facebook got hacked for 24 hours, nobody can access. Collapse. So try not to use mother shares unless you are going to hold it for long term as investment. Later, Eric, tonight book is primary focus on Facebook first can another thing about this, after tonight I will show how to do a bullish trade. Okay, bullish trade, bearish trade, intra-week and swing. Another one what we call income market multi-direction trade. So okay, I did promise you 4 to 6 strategies. So whether I can trade now, we do not know. Let's do one by one first. Let's go to analyst tab here. Let's type Mr. Facebook here. Because I'll be honest, CFDs are also very risky. Why? The leverage there. And another thing CFD I don't like, commission very expensive. Okay, now somebody want to do a bullish trade, correct? A bullish directional trade, correct? First, 250. Let's say we start a budget. We buy a call will cost you $2. So you all can't afford a call because some of you want to trade for $1 or less. So we cannot do it. Okay? Somebody want the $1 cheapo trade, correct? Okay? So here is a $1 cheapo trade. If you are right, okay, if you are right, you can make 100%, more than 100% return. You buy a 185 call. You buy a call will cost you $2.11. But your budget is $1 or less, correct? $100 or less, correct? So you do what I call a bull call spread. Profit how much? 170. Maximum loss 80. Okay lah. Okay lah. As long as the market go up by more than 250, go up by more than $2.50 to above 185 okay, go above 185 you make your 200% return. Okay, this is a simple way of doing Any questions about this chip? Any question about this chip trade? Thomas, can I do 30 days? Yes, you can do very far. But the problem for a debit spread, let me show it to you. Whether you do 10 days or you do 30 days or you do 30 days okay, the maximum profit is also the same. The maximum profit is capped to 250 spread. You buy $1 here, okay, you maximum 50, $150. So for debit spread trade, I tell, let me show you best to do debit trade 28th of September is 45 days away. You see now. So my debit spread trade is best done intra month or intra week. You see now. Because if you hold for 10 days or whether you hold for 10 days or hold for 24 days, hold for 45 days the profit is capped. And debit spread trade is always best done short term. So now, the sun was 80 cents, right? Now it's 77 cents. your profit is 177.75. Any questions regarding this $1 trade? $182, $185. Okay, I explain to you now. Now, you have a trade basically you have a trade here. Can you say out, John? Can you tap direct to me? I can't see the question. Yeah. Basically, you buy a call for 182.50. Means that you have the right to buy a call for $182. But in order to reduce your risk, to 77 cents, okay, you buy one, sell one, therefore you can pay 78 cents. Thomas, can I buy a straight call? Yes, you can buy a straight call. You buy a straight call will cost you, okay, $2.14, $2.13 here. But your budget is $1 only, correct? So no choice, you have to do a spread. So you buy 182, but you short 185. 182.50 and 185 is $2.50. You buy, if both legs are in the money, you can see here now, maximum profit, if market go above 185, you'll make $173. Why? Because you pay 77 cents to open the trade. 77 cents minus 250 is 173. Thomas, can I buy a straight call? Yes, you can, but it costs you $2.13. So some of you may not have the budget for $2.13. And moreover, if you buy something, okay, if you go and buy a straight call, straight put, my advice to people, go and buy, okay, go and buy a straight call. Buy a straight call means that you must buy more than 30 days. Okay, you buy a straight call more than 30 days or 60 days. So let's say you buy a 66-day call, will cost you $588. Nothing wrong. This one is a valid trade, but the problem is this: some of you may not have the budget to do the trade. Okay, you can buy a straight call, okay, or you can buy a bear call vertical debit spread. Any questions? Sean, you send me a message, is it? Well, options 101. Okay, fine. You see, when you bought a call, you have the right to buy the shares. Okay, the strikes are for today's discussion purpose are used at the money. Okay, for you to maximize profit, it must go above 185. I repeat, for you to maximize profit, the underlying must go above 185. Because you have the right to buy the shares at 182.50. So you can take your profit maximize until 185. After 185, your profit is capped at 185 because you buy at 182.50. You short 185 to hedge to offset the thing from $2.13 dropped down to 177 cents. For those people who who have lower capital and who are more confirmed learning trade, it's best to do this start 77 cents trade. Cheaper, great for learning, and best part 10 days only. Basically, just think the way. When you buy a call, basically you long the shares. When you sell a call, you are short the shares. You long the shares at 182, you short the shares at 185. The difference is 250. For that you pay 77 cents. So 250 minus 77 will give you a profit of 173. Any questions about this one? If you want to know more and details about this one, my advice to you, yes, your 77 cents is your stop loss money. Okay, is your risk capital, your stop loss money. The worst case, can you lose? The worst case, okay, can you lose is 77 cents. Definitely better than buying other shares, correct? Any questions? Sean, there is many different variations of vertical spread. You can buy one in the money, you can buy one out of the money, you can buy one far out of the money, you can buy one just at the money, you can buy one at the money, and you're long it at the money, you're short it out of the money. But for tonight's discussion, we just focus doing a typical standard SOP debit spread, means that buy at the money, sell out of the money. Any questions? For those who interested in detail, you can organize a private session for. I can organize a private session for all y'all. Okay, I can organize a private session for all y'all. Just drop me a message through my WhatsApp. Later I'll give you my personal contact details. You drop me a message, or you want to have a private one-to-one session with me also can. Any questions so far? So you can buy a straight call, 66 days away, 1818 something, straight call for what is, for 19 October, for what, $54, 185 call for $545. You can buy a straight put for $213. But all things be equal, I will still like you to buy a debit trade, because a debit trade will minimize your risk. Remember, for this number here, 2183, you can buy almost 3 contracts of this trade. You mean now? So which one better? Risk $200, $218, or this buy 2 contract, this risk $154. Which one better? Somebody mentioned about multi-directional trading, neutral trading, sideways market, correct? Let me go and do a trade for you. Now I do what I call a range bond trading. Some of you say, Thomas, the market the market can go range bond. I don't like it. Okay lah, I don't like it. No good. Some cannot do. Too tight. I need to do further out in time. Let's do a 24 days 24 day cycle. Yes and no, Sean. If you buy a 182 call, how much you pay for it? Okay, let's say you buy 182 call, There's no 82, there's no 182 call lah. There's 18250 call. 18250 call 12850 call is what, 3 for 24 days is $3. So your break even become 18550. Okay, 18550. Just now somebody, Eric or somebody mentioned to me about a non-directional trade. This is a non-directional trade our friend Eric was talking about. Okay, he mentioned on sideways market, correct? This is what how I trade my sideways market. Sell 1857, buy 190 sell 17525, 170 collect $1 maximum loss is 149. Return over risk is about 67% in approximately 24 days. As long market stay between $172.50 going to the high of 187.50, you make a return of 67% return over 24 days. Maximum can be shorter if you get early forward. Maximum loss is $150. Any questions so far? Kiva, you must calibrate yourself. You cannot use default strikes. What's the powerful options is that? Options is variable. You can see how many strikes here? A lot of strikes available. Yes, you need to carry a strike itself. If I use default, sure lose one. I don't show you default. Thomas. You see here $200 and $211. Hello, you sure lose one. If you leave trade like that, you sure lose. Why? If this one out of the money, if the put side out of the money, the call side is in the money. Because one side is out of the money, one side is in the money. So this is cannot. So you need to adjust both sides is to be out of the money. In this case, both sides is just what we call far out of the money. Okay? Any more questions? Okay, anybody? No, I see you all do bullish trade, so all bullish trade I set to itself for you already. Next, anybody who not so sure but who think our friend can move breakout breakdown in the last what we call cover a double side trade. Anybody interested in doing a double side trade? It means that the thing shoot out, you make money. The thing shoot out, you make money. Anybody interested in a double directional trade? It means that if the thing drop $5, you make money. Okay, if the thing go up by okay, go up and go down by $10, make money. Why not? Straddle, let's be honest, Straddle is too expensive for most people. Let's say you follow Irene example. Irene was an example by a Straddle. A Straddle means that same one call and one put, basically cover both sides. You buy one, buy one Straddle. Hello? You see the price? One Straddle will cost you $11. $11.25. For you to make money, using a Straddle, why a Straddle, Irene? The thing must drop below $168 or go above $191.25 just to break even. The thing must drop below 186.75 or go up to 181.91. just to break even. So Irene, shredder is not buy a shredder is not a good idea unless you're going to have a $20 move. Then okay. Okay, Irene? If you need help, drop me a message afterwards. I will private session with you. Do not buy shredder. So expensive. The break even, hey friend, for you to make money, you must drop below 169, 168, or go above 192 leh. And how much you make? You only make 75 cents only leh. Okay, Irene? So, this I am a trader. I don't sell classes because my job is to empower you because I financially okay already. Which trade talking about, Irene? Okay, let me delete the straddle. Okay, wait. Double direction, not left, right, center. Left, right, center get up and down side we can make money. That is more than one trade. Okay, now I'm going to do a trade here. For you to make money, the market must stay, okay, I think, let's say do a trade that is go up and go down by $10. Can Can Facebook go up and go down by $10 by next day? Check. Price action valuation now is one day is about ranging about $4 a day. By the way, this is not a good trade, but just take a look carefully. Buy 180 call. Okay, buy 1775 put. Sell 1825 and buy short 175. Sorry, short 175. Buy 175, 1775, 175.5. Buy 180 short 185. This trade profit will be approximately, I think, about 50% return over risk. If the market go above 182.50, you make money. If you drop below 17750, you also make money. How much you make? You make 70 cents. The maximum loss is 180. Return over risk is how much? Okay, return over risk is around 40%, 90%. It's about 40% return over risk. How many days? 4 days. Any questions? Any questions? Maximum return, not minimum return. That is what you call, these trades all are spread trading, correct? Buy one call, buy one put, is actually buy a spread. So the spread for this trade, maximum risk for this trade is $1.80. For you to lose money, the market don't move. See maximum profit is 70, maximum loss is 180. For you to lose money, my friend, is very straightforward. Market don't move. This one you want it to move. Okay? Any questions? If you really want to do what we call a left right center trade, means market don't move I make money, market go up I make money, market go down I make money okay. Okay, I'll show you a trade later. Tip what mean by max price to fill? Max price to kill sorry we don't have killing price Okay, for proper trade, tip is one of my option students, coaching student from Thailand. My advice to you, if you want to do, no, not to kill, not to fill, to tag kill, okay, fine enough, okay, my advice to you straightforward, try not to pay more than 150. I repeat, try not to pay more than 150. Okay, I got students who queue for 70 cents, 80 cents sort of thing. But I don't mind. Try not to feel more than 150. Must done at the money call, at the money put, higher chance of success. If for you to lose money the stupid thing very straightforward. This one must stay exactly, for you to lose money must stay between 1775 and 180. This is your worst case scenario. Okay? Anybody interested for iron condor, income iron condor, fill at least $1. Okay, fill $1. This is what we call an income high OPV option trade. Means is means it's high option premium volume. Means we are selling premium. All the trades we hedge okay, all the premiums we have here are hedged. No such thing as suddenly the broker call you up, you lose $5,000. No, buy is fixed, sell is fixed, sell one buy one. Debit trade is 150. Okay, current now price is fluctuating 180, too expensive. So you may not want to do it. You may want to queue to 150. Anybody interested to have a multi-dimensional trading? Up, down, sideways, sure make money one. Anybody? For this directional trading, yes. Tonight pricing not so good, but you okay? As a good trader, okay, based on my rules, I share my rules to you. The advice I give to you, Ivan, Ryder, Irene, all these I give the advice. Okay, I give advice. Is all hands-on live practical learning. Minimum sell for $1, buy for 150. How to do a left, right, center trade means what? Okay, listen to me carefully. Sell two of these. Sell two of these contracts out of the money. Buy one at the money. So basically sell two for $2 credit. You go and buy 150 here. So you end up creating what we call a bracket multi-directional trade. Sell two credit for $1 times $2. Take the 150, go and buy one here. Okay, this is what I call, this is a coaching level stuff I'm teaching you. Sell two, buy one. If the market don't move, you still make 50 cents. If the market go up, you still make money. The only time you lose money, if the market shoot up all the way. Means what? For you to lose money, you will lose less. The thing shoot up to all the way to how much? To if you think go above 190 and drop below 170, you lose money. How much money you lose? Let me check first. You lose only $2. Okay, if don't move, you make 50 cents. Maximum loss $2. If the thing best condition go above go to 18, let's say 183 now you make how much? You make a grand total of 250. Maximum loss is $2. Don't move, 50 cents. This is not a good trade, but this is not a best trade to do, a good trade to do, but it's a good example to share to you how you can use options to trade multi-direction. Don't move, make money. Move by a few dollars, make more money. You should move extreme movement, it will cost you to lose more money. You lose money. How much money lose? Maximum money you can do now is $2 for 3 trades. 2 contracts of this, 1 contract of that. Any questions? If you don't understand, please send me a message. Send me a message. Send me a message. Drop me an email that I will talk to you in private. Message me at WhatsApp here, 90487618. That if you want to have a private session with me, or if you want me to invite you to one of my so-called open live trading live market sessions. 90487618. Drop me a message if you want to have a private session to me, or you want to attend one of my those open house training sessions. So Thomas, any other questions? Anybody want to do a long-term strategies, do a long-term trading strategies for Facebook? Give me a budget. Anybody want to do a 1-year trade options? No. $250. I already choose tape. The strategy I showed to you all are good for it. Okay. Listen very carefully. All the strategies I showed to you are valid, with the exception with the exception of this one the 19th October, that is $500. The rest all are valid. Define long term, Ryan. 1 year, 2 years, or you want to do June 2020. June 2021 buy one call, $3,400 here. How many days? 674 days away. Means 2020. 1 year, bad news. You can't 1 year chart patterns is about 300. We don't have 1 year lah. Can I do 311 days? You see here now. Can you afford it now? $2,000. Of course, it's definitely $21. Is definitely buying $180 shares. Ryan, how much knowledge you have in option trading? How much knowledge you have in option trading? Got any experience doing multi time frame trades? Then I'm not going to share to you. If I were you, I would do this trade. I will tell you to buy a calendar. Okay, where are? Here, buy a calendar. Okay, January 2019. Bad news, because your budget is so low. You only can do whatever you do is not what you want, my friend. It's always dependent on your budget. Your budget $1,000, you have to live with it, no? So you have a trade, you have a January 2019, 157 days to trade. You reduce the price from you reduce the price here from $9.11. If you go and buy a straight call, will cost you $1,300 over dollars. Short 7 of September, 185 call, buy a 185 January 2000 and January 2019. Basically, short term, long term. Anyway, Ryan, let me share with you something. My advice to you, do not do a 1-year Facebook trade. Unless you want to hold for long-term investing, for trading purpose, I will explain to you same reason why. That's why I explained to you earlier on, correct? This one for directional trading, Ryan, for trading, not for investing, Ryan. This one, Facebook is very sensitive to earnings. Earnings every 3 months. Every 3 months got big movement. You understand what I'm saying, lah? So your trade may be right, go up to $200. Come October, another bad earnings drop down to 170 again. Okay? So if you want for $1,000, do a 90 intra quarterly trades. Yes, let's go and do an intra quarterly trade. I share to you all our hard-earned, priceless, hard-earned knowledge, expertise. I've been trading this for donkey, so many hundred over moons ago. I very sensitive. So for trading purpose, why don't you use a directional trade? Simply buy a call here. Buy a 180 call for $5. You can buy 2 contracts for $1,100. It's definitely much better than go and buy a $3,000 thing. Okay? Understand saying buy 2 contracts, Thomas, 38 days, very little time, I cannot maximize profit, Stop! Ryan, as a trader, your job is not to maximize profit. Your job is to minimize risk. Correct? If I tell you, I'm not joking, if Facebook cannot hack for 12 hours, cannot access, can lock in, I tell you, Facebook will tank. Of course, China government may give welcome Facebook to go in China market, but between Facebook being hacked and China government now welcome Facebook into China market, I tell you, hacking is more higher chance at the moment in time. Costing $1,130. Cannot. Thomas, cannot. I don't have the budget. Fine. If you don't have the budget, you can buy this. Buy a straight call. Buy 2 contracts. Still valid. You can buy at the money, out the money. Buy 2 contracts, how much cost you? $700. Okay, what's the call? The call is 185 call. Can make money now? Yes, you can. Because where is 185 call? 185 call, you just went, hello, 185 just only last week, just 4 days ago, it was above 185, correct? So 185 call valid or not? Yes, it's valid. So you may want to consider to do out the money, call, 2 contracts, 185. Valid or not? Very valid. I explained to you. Last week at 185. Okay? Do me a favor. Do not be itchy backside or hero and go and Thomas do this. Thomas, I buy 60 days away. I buy 10 cents options. I buy what? I go and buy a 30 cents. I buy a 30-cent call at $220. Do never buy far out of the money. Yes, you can. But you go and buy a 220 call to do this trade. You are doing what we call jackpot trading. Okay, we are traders. We are not jackpot players. Ryan, understand so far? Anybody want to do any more directional trades or anything? So I cover it. So those people who want to have a private session with me, please send me a message. Especially you, Ryan, and Irene also same thing. Please do not go and buy a shredder or strangler. Okay? Okay? You want to sell, also think 2 times. Because end of the day, there is better risk ratio. There is what called better return over risk. To me, as a good trader, we don't focus on taking profits. What's the TP, projected profits? We are more interested. What is your potential profit? What is the potential risk kills? Okay? Losing is more dangerous than winning. You should focus on danger. Once you conquer or you master the art of losing, then you master the art of winning. Winning is not a problem. Okay? It's always losing the problem. Okay, now just I mentioned about somebody mentioned to me about this trade. Okay? Thomas, if I buy this trade for 350, my break even is 188.50. Yes, you're right. Provided you hold until the end. I repeat, provided you hold until the end. My advice to people, never hold until the end. Okay? If you enter a trade, 185 call trade, if after 5 days, 10 days, do not go in your favor, you know what to do lah. Cut loss already. Because you are doing why after 5-10 days of trade directionality, do not go in your trade, because your trade is only how many days? Your trade how many days here? Your trade is only 33 days, correct? Okay, let's say you enter buy a 185 call for 33 days. If by next Friday, say enter today, by next Friday, do not go above 185 in your favor. Hey friend, get out, cut loss. Gentlemen, ladies and gentlemen, saying why? I doing a swing trade after 5-10 days do not move in my direction Means what? Gentlemen, ladies, can you tell me means what? Hello, anybody can hear me? Yeah, no good. To me, let's be honest each other 2 good days of movement the thing become in the money already Okay? Sean, this after 5 days question you need to talk to me in personally prior to me, I explain to you, or you join me as one of my follower students. Market round assumption. After you enter a swing trade, correct? 5 trading days, don't move. 10 trading days, don't move. Let's get out lah. Means what? You're wrong, correct? The only time you can hold until the end is where? Is when you do a debit spread. You notice my debit spread is how many days? It's not 30 days My debit spread for this trade is only 10 days only In fact I tell you point blank okay, in some cases my students and my followers buy 77 cents don't even do not wait even until expiry buy 77 cash out at make $1 or make 80 cents take profit already You send me So like this trade like that, maximum profit is $173. If people make 80 cents $1 you will run already Why? Not greedy Thomas, hold to the end, maximize profit. Stop thinking of maximizing profit. If you can get in and get out and make 50 cents, 80 cents, $1 4-5 days in a row get out. You can always open a new continuation trade. Do not be greedy. Buy one trade hold for 30 days, 90 days hoping to maximize profit. Your job as beginner traders not to maximize profit. Okay? There's nothing wrong trying to maximize profit. There's nothing wrong selling January 2020 calls. Okay? Provided you know what you're doing. As a beginner trading, as a beginner trading. Okay? As a beginner trader, You try to learn as fast as possible. Do not hold too long. The longer you hold, the harder for you to learn. Okay? No cut loss, my friend. 3 days expiry. Hold until the end. Or you just simply, okay? Mr. Lai Chi Kyong, talk to me in person. That is very advanced stuff. Even my coaching student tip have not learned this methodology yet. Okay? Basically, you sell 2 contracts far out of the money option, far out of the money out of the money iron condors. You buy one at the money iron condors. More important now, you must buy cheap and sell expensive. Okay? What strike price you use? This one you really must spend time with me. I teach by my students. I think quite number of my people are attending. My students attending class. My philosophy very simple. To become a good trader, trade to learn. So like my student tip like that, come and attend this public sharing educational webinar. Come in and ask trading questions. What is this? Okay. Okay. I show you for 3 minutes. Record down everything. Please, Eddie, everybody else. I will continue in 3 minutes time. Okay, any more questions? Testing 1 2 3. Testing 1 2 3. Testing 1 2 3. Any? 20 more people here. Let's go. Any questions? Any more questions to ask? Hello? Can you hear and see me? Oh. Sean asked a good question. Okay, where expiry? Okay, as much as possible, depend what type of trade you use. If you do a spread trading, whether it's a debit spread or credit spread trading, okay, debit spread then it's always best to use shorter time frame. Whether is it 90 days or 60 days or 30 days or shorter than that is up to you. Sell a spread also the same thing. Try to keep it as short as possible. When you buy a straight call, buy a straight put. Stochastic put most of the time I tell people to buy intra-quarterly cycle, means what, 90 days or less. Unless you want to trade GE lah, you want to trade GE, trade Ford lah, Deutsche Bank lah, those trading one is no longer tactical trading, become positional trading. So for tactical trading means in out fast in out within 90-day cycle, try to do 90 days or try to buy 90 days or best, 90 days or less, because why? Options buy long term do not give you extra inherent advantage. Because why? If you are trading shares, if you're trading like our good friend here, like that, I show to you, where is it? If you go and trade our good friend, where's my slide? If you go and trade my friends here, if you go and trade this bunch of friends here, where here, if you trade Facebook lah, Apple lah, Netflix lah, Alibaba lah, Twitter lah, Google all these companies here are earnings sensitive. Means that earnings come out the thing can drop 5, 10, 15, 20, $30. In some cases for Amazon can even more than that. Up or down is dependent on market forces. News good or bad have no relevancy to the underlying, because end of the day the retail public will buy on good news, but the insiders may sell on good news. So like here like that, Facebook 250, Apple 100, 250. All these are spread trading by nature. Okay, spread trading by nature. This by the way, this Friday night I'm having a webinar on how to trade US market $100 or less. Okay, I think for this webinar itself, I intend to do this one live over in TRT center. Okay, so you're interested, drop me a message. I'll invite you to come in for a live webinar come broadcast session. Okay, any more questions? Enough lah. Sell 2, buy 1, multi-directional trading. Because spreads must go shorter, because intraday trade, in case I tell you, spread must do shorter, because why? Whether you hold for 60 days, 90 days, 120 days, there's no inherent advantage. Buy straight calls, buy straight puts, you have advantage because you got a potential to maximize profit. Having a spread have what we call a spread trading is fixed risk, fixed reward. Okay, as for intraday or intraday trading or intraweek trading, use the options nearest to expiry. I repeat, use the option nearest to expiry, but do be very careful. Why? Day trading options need higher understanding of options market. You cannot simply go and do like the income trade or breakout trade strategy I showed you just now. Straight call, straight puts, because the reason is very important. If a thing have a big move, options pricing tend to be more expensive, and the bid-ask spread tend to be huge. So if you don't understand properly, anyhow trade, and if you don't know how to trade, even you trade smart, but you trade dumb, if you don't understand options, you still can do the trade right and still lose money, because you have overpaid for, you may bought the options at a very expensive price. Understand so far? Who the guy asked me for the trade trading? Any questions? Understand about options for day trading now. Be very careful for options or day trading, because if you trade in a volatile move, the bid-ask spread option premium will be expanded against you, the retail trader. Any questions? Any clarification? Yes. Specific strategies is for day trade is dependent on underlying price action value of the shares and the option pricing in relation to the price action value and the expiry date. You cannot dumb trade across the board, please, please, the same iron condor I showed you here, okay, friend. This one is sell, this one is buy, this one is a breakout trading, this one is a zone range trading. There got 12 different strategies to trade iron condor. Can be in the money, can be out the money, can be both in the money, can be what you call a boo iron condor, and can be a bear iron condor. You see now? So there is different strategies available for different things. Let me show you. Let's say I do a boo iron condor for you. Listen to me carefully. How to do a boo iron condor? Yeah. Wrong. Wait, I'll check first. This is what first. Buying 175 put. No. 725 put. You see. So all these are different strategies. Okay. I should not. Wait. No much time to go and play adjustment for it. This one is best during a live market session. Then I can explain to you more in depth. Anyway, boo bear is basically sell the call, buy the call. No, sell the put. Sell the put side, buy the call side. Okay, where you see first. Let me show you. Let me check price first. Wait, I check price first. I need something first. I sell a 180 call. Let me show you a boo trade. Sell the put 180 put, hedge by doing 1775 here. You see this is a boo iron condor. Sell the put spread, buy the call spread. You see So good, can do How much it cost you? Yes. See So you got boo. So maximum profit for the trade is $2.50 minus the debit you pay for it. Okay. So what happens if you're wrong? The thing drop below 1175. Then you lose more money, You will lose you will lose 261, All these are different strategies for different purpose. Anyway, I talk too much already. Sorry, my apologies for confusing you all. Any more questions? Last question before I end this webinar. I'll repeat again. For those who are interested to have a session with me or to attend a live physical webinar, a 3 hours live workshop covering every strategies, covering every segmentation market, options, forex, futures, shares, and everything, drop me a message. I will invite you to attend. Questions? Calling once? Anyway, personally now, I feel that our friend can do a bearish trade now. Okay, let me show you how I do a trade. This is 5 days. The leading edge of bullish bearish trade must be what? Based on 5 days, 15 minutes. Look carefully. Why is the opening? This is now currently Facebook is in a bearish cycle. What I mean by bearish? What? Intra-week, 5 days, 15 minutes candlesticks show is bearish. Why? Monday opening high is 188. Now today's trading session is what? 178. So means that in the last 10 days from the high to the low drop by $10 and the 178 went today okay. So in the intra-week cycle trades we Facebook is bearish. However, if you look at the longer time frame and look at time frame, you can see here in the longer time frame trade here, you can see actually now you can see in a 20-day cycle 1 hour candlesticks Facebook is actually in a sideways trading channel. If you go and do a look at day chart patterns you can see Thomas our friend Facebook is bullish, now is doing a bearish retracement. Hello, it's only bullish to me when they break the high of 188 here. That means that higher what? Here go down, higher high, higher low. Then for it to become bullish using day candles must make a higher high. If not, it's a sideways channel. Any questions about short-term what you call directional trading using my multiple time frame analysis? Any question, ladies and gentlemen? Calling once. If not, ladies and gentlemen, let's end this seminar. Okay.